Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have CEO Hubert Lau from TrustBIX. TrustBIX trades on the TSX Venture Exchange under the symbol TBIX and on the OTC under TBIXF. The company is currently trading at 14 cents with roughly 38 million shares outstanding, or about a $5 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks so much, Trevor. Great to have Hubert here. Hubert, we spoke, I don't know, about 3 months ago. So we've got a little bit of an understanding of what you guys do, but certainly happy to have you here today to tell all our members more about the company, TrustBIX Incorporated. I'm going to hand it over to you and let you start your presentation, and off we go.
Well, thank you so much for the opportunity, Paul and Trevor, to meet everybody today. My name is Hubert Lau. I'm the CEO of TrustBIX Inc. We are a gate-to-plate supply chain traceability and brand promise assurance solution. So for the next few minutes, I'm just going to share with you really quick about our company. Oh, hang on here. Is my screen frozen? Oh, here we go. Okay, so just the standard disclaimers. But really, our purpose of our company, why do we exist, is through that brand assurance, we want to create a world where we trust more, waste less, and reward sustainable behaviors. And it's all about that incentive of creating trust and waste less and sustainability. That is what we're about. So some of our original products is BIX, the Business Information Exchange System. And what that is actually how we would use this proprietary platform to create trust without compromising privacy through our use of blockchain, metrics, and benchmarking. And what we do is leverage this platform to create unique incentives into our solutions so that we create a market driver that will incentivize participation. And then we deliver independent validation of the brand promises into the supply chain. So let me also share with you other products that we have in our company. We also have a wholly owned subsidiary called ViewTrack Technologies, and about 85% of all cattle auctions in the Canadian market, and just under 40% in the U.S. market. Those cattle auction marts use our software to run their auctions, do their settlements, and everything. So we're kind of like their ERP solution for auctions. We do the same thing for hundreds of feedlots in Canada and the US, as well as we have a pork grading probe that helps buyers and sellers set the price of a pork carcass once it's harvested. And we're most well known in Canada as well as in China. So the largest players in China pork market use our products. So just kind of some key accomplishments of what we have. About 30 million pigs are graded each year in Canada, China, and Mexico. And as most of you know, the African swine fever is rampant in China. So we actually had to pull down these numbers. It used to be more like 50 million. And in our business info exchange system, since 2014, we now have over 8 million head of cattle tracked, and through our whole company, over 18 million since 2014. And if you look at estimated retail value of what we're touching and tracking, tracing, supporting, it exceeds well over $30 billion. Here's a quick heat map of our customers, just so that you know we're not just a little operation out of my basement, but we have many customers all across North America into China. So many people ask us, what is how does our platform work? And so I hope many of you, when you were younger, or maybe even now as you're grown adults, you still play with Lego. So I'm going to use the Lego analogy. So you know that green plate that you get, that's this one here. To build everything from, that's our BIX platform. That's the green plate. And then on the left here, the hand with all the Lego pieces is that think of it as all of the different types of data points that we have access to, whether it's through our own hardware software or through partnering companies' hardware and software that they give us access to. So all of those are what we call our Lego pieces. Those are our building blocks. And from there, up to the top here, we can use those building blocks to build all kinds of different Lego builds or all kinds of different applications. And those applications will collect data. They can report on data. They have benchmarking. It could be, a great dashboard, different ways to use information in an aggregate manner so that it creates value in the food that we eat, in the supply chains and so forth. So let me give you some examples of what we've done already to kind of solidify this analogy. Oops. Still having a little problems with my computer for some reason. So first off, before I get into that is, we talked about brand assurance. So what does that actually mean? So let's start on the bottom here, buyers. So this could be your retailers, wholesalers, distributors, and so forth. And for them, their brand may have different types of information or branding. So it could be about values. It could be about sustainability. It could be something about social, economic, or even local, buy local or something, right? And those buyers really care about these. And so they look for brands that represent what they believe in. And the brands have to be supported by brand promises so that it makes sense why those brands exist. And then those brand promises are actually backed by attributes, like actual data points. So the actual data points is what we collect so that we can aggregate them into supporting the brand promises, which then supports the brand so that the buyers can buy what they want. So one example is, we have access to a software platform called BuildSense. And what they do is they measure energy usages in an operation. How much electricity, how much energy is being used to produce whatever they produce. Birch Biological Carbon actually looks at a land, so maybe hundreds and hundreds of acres. Instead of just saying how much is it worth in real estate terms, we actually look at it and say, from the biological carbon side, the carbon equation, what's the value of this land when you're assessing it from that angle? And then finally, from our traditional TrustBIX suite of products, we can get all kinds of producer inputs. So all of those different types of information comes back into our BIX platform, which is the green plate again. And from there, we can make brand claims so that the buyers have information to make decisions, what they want to buy and why they want to buy it. Okay, so this sounds all very complex and confusing. So let's use a real example. Hopefully many of you have heard of these companies like McDonald's, Swiss Chalet, Cactus Club, Original Joe's, Walmart, and so forth. And you have actually ate their burgers at some point or ate their steaks at some point. Well, if you have, and you're Canadian, congratulations, because you are part of a whole brand story, which is that Canada is the very first country to have a certified sustainable beef supply chain. And it is also within the story that these retailers are paying a financial benefit back to the producers, right back to the farm of origin. Those farmers and ranchers are getting extra financial incentives because they're producing sustainable beef products. And we are the technology behind all of that tracking of data, the ability for companies like McDonald's to know they can make these sustainable claims, and that if they are challenged, we would be there to back them as a neutral third party. And we're the ones who calculate and distribute the funds to all of the farming operations across Canada for producing the sustainable beef supply chain. So when we're talking about all the different data points, we get data points right from the farms all the way through until it becomes a steak or a patty. And then we're using that information so that the companies can make their brand claims, as well as being able to reward sustainable behavior in this supply chain. So another example is a brand called Authentic Angus. It's a smaller brand, but they came to us and said, we want to export our high quality products to Hong Kong. Could you help us? So what we do is we have actually also tracked their information, and this time not only tracking the production and feed information about the animal, we're actually tracking all the logistic information as well. When was it harvested? When did it leave Canada? When did it arrive in Hong Kong? What was the temperature throughout the whole shipment? And when it goes from the airport to the further processing plant, who transported, what dates, what were the conditions of the transportation, and all of that information right until it becomes a package and the consumer can eat it at a restaurant or buy it from the grocery store. And then we have this QR code, and if you get a chance, with any of my slides, you can scan any of the QR codes, and it will give you examples of the type of data that we share. And the buyers get more data, and they get to choose based on their brand promise what they show to their consumers or what they show to their retail buyers. Yeah, and I'm not going to go through everyone, but people ask us, are you just beef? No, we're into the alternative proteins. So this is a yellow pea project that we're currently doing alongside with companies like Farmers Edge, OPI Systems, and Merit Foods, and so forth. So that, again, looking at how using data, using our platform to derive higher valuation, higher confidence in what is being sold. And everyone then asks me, well, how does TrustBIX make money? Our goal is to make money on a per transactional basis, on a per unit basis. So it could be per bushel, per head, per kilogram, per ounce. We don't care as long as it's transactional and it's residual, because that's how we grow our company and our revenue. Okay. We talked about reducing waste as part of our equation. Converting biomass into bioindustrial products is very critical. So we're working with an Edmonton company right now called Always Demolition, as well as the Biomass Quality Network of Canada, and looking at ways to track, trace, and allow quality claims by the buyers about the conversion of biomass into bioindustrial products. Do the same thing with land and in agriculture. We do the same thing with energy. And right now, everybody likes to talk about ESG. Well, how do you measure ESG into the future when more and more institutional investors are going to be asking companies to give their ESG, not just the little paragraph about what their ESG position is, but really saying, how do you measure the impact of your ESG work within your company, within the supply chains that you're part of? We are there to position ourselves to continue by pulling all of the examples together I just talked about into a whole value chain ESG equation, so that companies can confidently report on it with third-party validation, which is by us. So if I could extend in terms of revenue, I talked about the end product. So I said we like to be paid on a transactional per unit basis, and that's what we're building right now as a company. But on the other side, because what we're doing is we're allowing input sources of data, and those input sources can make more money in basically what they do with us. We don't actually buy their data. We actually say to them, you have to pay to be on our system, because by being on our system, it generates more revenue for you, it brings customers to you, brings opportunities to you. So therefore, you've got to pay us as well. So that's why, from our perspective, every time we create new metrics, new benchmarks, it becomes new revenue opportunities for us. And these are just some examples to give you an idea of what we're talking about. We're in the process of doing our year-end financials, so I cannot speak to that. But our Q3 year-to-date, which is publicly public information on CDAR, so we've increased our revenue by 50% against previous years, before COVID and during COVID. Increased our R&D budget by 100%. Our operating expenses, including that increase of R&D, has actually pretty much flatlined. We'd slightly decreased by 3%. So what hopefully this shows is that we're finally doing this in terms of this is expenses, this is revenue, and then in the middle is the increase on profitability. In terms of growth strategies, we'll continue to expand in our protein lines of products. So again, we're not just beef, we're beef, pork, poultry, and so forth. As you can see, we expanded into the plant-based proteins and all the byproducts. In terms of the ESG side of the equation, we're measuring carbon intensity, we're measuring energy usage, and we're also measuring waste conversion into usable products. In terms of market expansion, we're in Canada, and you saw it in our footprint, we are already in China, but we want to push further into US, like deeper into the US, deeper back into all over Asia, and with some of our announcement with work like in halal and so forth, we're really got our eyes in the Middle East. And as we all know, sustainability is massive in Europe. We're also expanding and looking at opportunities in Europe. In terms of, are we just going to be organic growth? Not at all. The nice thing about being a publicly traded company is that we can really have additional vehicles to go after acquisition targets, and we will be continue to looking at those. So everyone asked me, what are 3 compelling reasons to consider TrustBIX in their investment portfolio? Number 1, BIX is a proven commercialized supply chain traceability technology. We're scaling up now. So we're not just, we proved it out already. It's being used by some of the largest players in the world. We're now scaling up. Number 2, when it comes down to how are we going to scale up and grow, we already have the network, the user base, data points that we can dovetail and create opportunities for ourselves. So we're not going after cold calls. The discussions we're having are all warm calls because we already know them and they already know us. So it allows us to grow much faster. And finally, as I mentioned in the previous slide, we don't want to just grow organically. We want to create acquisition opportunities to, again, create more bulk into our business. This just a little bit about our capitalization. In the introduction, we talked about we are about 30 million shares outstanding. We've got some warrants and options. Many of our warrants will expire in beginning of February next year. And the insiders hold about 24 million shares. As I would say, insider and close associates, sorry. A little bit, I'm not going to bore you with reading about our team, but there's a full mixture of, we've got our cowboys, we've got a good range of different skill sets. As you can tell, most of us are not just fresh out of school. In fact, almost all of us have built businesses and have exited, and we kind of combine our efforts together. And our board of directors, again, I'm not going to touch too much on it right now. And then finally, just our contact information. And I just ask you, please stay tuned for more press releases as they come out in the near future. And in that, I'm just going to stop and thank you for your attention. And I'm open for Q&A.
Perfect. Thank you so much, Hubert. Why don't we start? You touched on a slide, just giving a sense of some of the sort of the revenue generated in the industry. But what specifically for your product and your services right now, what do you see as the total addressable market in North America?
In North America, I have to be honest, I haven't looked at the addressable market. And partly the reason why we didn't is that what we're seeing, especially in the ESG side of the equation, is that it seems like it's unlimited what you can do by combining different components together. So for instance, originally we were looking at, say, the beef industry, and we can say, oh, okay, the beef industry addressable market is like, so many billions. But then when we mixed it with calculating energy inputs, energy savings, carbon, then that multiplied what we could do potentially. So what we stopped doing was worrying about the addressable market, and what we said to ourselves is, let's just focus on the next deal, the next opportunity that allows us to continue to build on top of our platform and keep growing those. So I am sorry that I don't have a straight answer for you there, Paul.
No problem, no problem. Let's talk a little bit about the sales process. So how do you guys go and get in front of customers and convince them that this is a product or service that they should be using?
A great question. It's actually been a learning process for us. Where we started out is that we just felt that if we spend a lot of times with companies like Cargill, McDonald's, Loblaws, Walmart, and so forth, they would just create the market pull for us. what we realized is that those sales cycles are enterprise sales, which is, it could take 18 months or more to go through all of their approval process and understanding and so forth. And so what we have done is really continue our efforts in the enterprise sales to create those marketables, because when those happen, they're like home runs, every one of them. We need to have base hits if we're talking about baseball. So we need base hits. So what we do is we look at all of the partnering solutions that we have. So for instance, the energy audits, the energy monitoring, we can just sell those for short-term revenue. So where we have now is individuals in our company, they spend half a day each day, and we say dial for dollars. Just pick up the phone and call all of those user base that we have. So for instance, like if we just look at ViewTrack alone, we've got thousands of users. And then we look at, BIX, we've exceeded 1,000 users. So there are many operations that we already have relationships with. We just need to get in front of them and talk to them and say, would you like this service, because it ties you into a bigger supply chain picture? Mm-hmm. But let's just talk about today, which is what can we do to save you money?
Mm-hmm. Yeah, I'd imagine, partly because there's so much of an ESG angle to this, but is there any government mandates or incentives or initiatives that the governments are putting in place that either help you or hinder your business?
The only thing I would say is majority of the time, I would have to congratulate the Canadian and our provincial governments that they have not put any roadblocks in front of us. Mm-hmm. They've actually made it much easier for companies to participate. The only one that I would say has been a bit of a roadblock is, we were looking at maybe offering the rapid COVID testing into our supply chain. So imagine if the buyer, especially if a foreign buyer, they get reports saying that anyone that has handled their product during that period of time had been rapidly tested for COVID and they came up negative. So we were looking at things like that, but when the government gave handouts on the COVID testing, that kind of kiboshed that revenue stream temporarily. So rarely we get things like those, but majority of the time, there are many, many grants that we can go after that really helps us to get adoption and stay above water.
Mm-hmm. So let's talk a little bit about funding. How are you guys funded so far, and what do you see as your sort of need for funding in the next, say, 12 to 24 months?
Well, we had. I don't know if I'm allowed to say it this way, but I will anyway. So if I'm offside, I apologize. We had recently did a price reserve with the stock exchange to do a small private placement of 16 cents, and so we'll be putting that out. That we're going to be closing a first tranche shortly. Then open it up for everybody else to buy into it if they want to, and we like to try and get that done before Christmas. Our real effort, and that's really just to kind of fuel up the tank, because we got listed on the OTCQB a couple months ago, and we decided that in the new year we want to focus a lot of our efforts in promoting our company and our stock in the U.S. market. We've learned that the U.S. retail investor is quite sophisticated, and they're looking for valued companies to invest into, and we feel that we should be able to really resonate with them. So we're going to do a much larger placement in the new year, and that money will really be aimed at getting us ready for some potential acquisition targets that we're looking at, but we're still in early stages of due diligence there, so there's no announcements to be made there. So we may or may not go after the companies we're looking at this moment, but we are actively executing on that growth plan that I was sharing in previous slides.
Mm-hmm. Yeah, you mentioned M&A a couple times. So from what I can see, that you've got a platform, sort of platform service. When you look at M&A, what are you really looking for? Are you looking for potential customers or relationships in an acquisition, or are you looking for other technologies to bolt on to your business?
Yes.
Both. Okay, good. Yeah. Really,
what it comes down to is a synergy. How do we make 1 + 1 = 100? So it's the synergizing of what we have with what they have. Some we are looking at because of their network and their reach. So it gives us an immediate market access. Others, we're looking at their technology because it really complements, enhances for us, and we don't have to build it ourselves. And then as well as revenue opportunities, because ultimately, one of the things that we want to continue to focus on is our financial fundamentals, right? Like all great little tech companies, we have a burn rate right now, and we hate that. So what we want to do is look at opportunities that allows us to get into the positive zone as fast as possible.
I mean, you are a little company. What sort of resources do you still need, or sort of where are the holes that you need to fill in to keep growing?
Well, you asked some really good questions there, Paul. Like next time you got to give me notes ahead of time. You know what it comes down to is we're always looking at strength in sales, because what we say internally is, in very simplistic ways, there are three main pillars in a company: the revenue generation, so sales, financial management, and operational excellence. And when you're a startup, the order of importance is revenue generation, then financial management, then operational excellence. All three of them are important, but you have to have certain focus on it. So right now, we're in this stage is we will always are looking for more opportunities to create more revenues and drive them in faster. And until we're in that break even and so forth, then at that point, you're looking at the operational excellence. And in the meantime, you always want to hold the purse strings really tight so that you're not wasting the hard-earned money or the investors' money. So where we need help, any ideas on fantastic people that could help us generate more revenue, we are all ears.
And sort of where do you, I'm trying to think of your customers right now. What kind of pushback do you get from customers, or what if any hesitation do they have that you have to overcome to I could see sort of a point where you hit critical mass and all your customers sort of have to be on the platform. What gets you there? What gets you there convincing customers to get there?
What it comes down to is not a hesitation versus the perceived urgency. So, we can sit down and talk to a company about, one aspect of their business and another, and they would admit that they really need it. What we've learned is the second question we must follow up with right away is, how painful is it right now? If it's so painful that you'll buy, then we want to talk further. If it is just, we need it, but we're thinking longer term, then we'll maintain that relationship, but we're going to move on. And a really good example of what that is in everyday life is all of us know we should go to the gym and exercise, but most of us don't worry about it until the doctor says, okay, you're going to be seriously hospitalized if you don't start exercising. That's when we exercise. So really what we're looking for at all times is, how painful is that need? And can we create that for them and address that for them right away? So that has been more the challenge versus anyone saying to us, we don't really need your services, or we you're off track and we have no interest in you.
Gotcha. From the outside as investors, what do you think are the metrics or catalysts or KPIs that somebody should be watching for outside of just revenue, which is the obvious one? But what other things should we be looking at to sort of recognize if you guys are executing your business plan? One of our leading indicators internally is the engagement of those large economic buyers. So who is actually going to be in that buying end of the supply chain? So are we getting another Walmart in? Are we getting another McDonald's in, and so forth? Because those will mean that they're only coming in if they're paying and they're doing something with us, or they anticipate they'll be paying. So they may start with a pilot to test out, make sure it works, but those are going to convert into revenue streams. So really, from our perspective, is when we're looking at press release and so forth, what we try to tell the story as it comes up and is legitimate to release is to talk about the different pilots we're running and with whom we're running it with, so that it will showcase that if those are successful and proves out the value that we all think, like not just ourselves, but the other pilot partners and the buyers, then those are going to convert into revenue. Right? So from our perspective, those are
things. The second part, being a tech company, is are we continuously innovating and adding additional functionality and features into what we do? Because if we're not, someone else is going to overtake us, and we're going to become irrelevant. So it's very important that we're always on our toes to be adding more features, adding more functionality into what we do. Even if they're legacy products, people still want more for the same price, right? But you want to get more customers that way, and then you also want to be able to keep and maintain those customers and make sure they're happy.
Give us a sense of the competitive landscape. I mean, are there a lot of other companies trying to, do what you're doing right now?
What we find is that a lot of companies think that they can do what we do, but they really do it in terms of a company versus a supply chain, like a whole visual on the supply chain. So when we're talking to like McDonald's making their claim, it was about the whole thing, right? So it's not just about one operation. Or others that we've seen is they're focused on one food sector. So they're just in certain types of foods. Ours is actually adaptable to all things. And I see on the chat message, Matthew was asking where food comes from in the US. Are they a competitor or not? They were at one point, and then they realized they could not be an auditor and the validator at the same time because they're in conflict. Just like PwC can't be my CFO and our auditors. So what they have done is they've actually gone back to the roots and became auditors. So quite often they may work with us and they would audit our work to give the assurance to our customers that our system works well.
I should have asked everybody earlier, but if you've got any questions you'd like me to ask Hubert, please feel free to use the chat function like Matthew did, and I'll do my best to ask the question. Hubert, if 5 years from now, what does this business look like?
5 years from now, what I see is that there are many supply chains and value chains using our system for validation, and not just in terms of food production, but in terms of reporting on their ESG strategies and claims.
Okay.
And that would be worldwide across many food products.
Yeah, gotcha. And then any other growth opportunities we haven't spoken about here? I mean, this seems like it could apply itself. The chain of, or validation chain applies to so many different businesses. I mean, so far we just talked agriculture, but I could see this sort of thing applying to any product that's manufactured. Did you ever look at something like that?
I would say that when we went public, I could have raised all our money in Canada. But I decided that, with the board's blessing and our team's blessing, is that I went down to Asia. So we raised the last 20 to 25% of our money in Asia. And some of the largest investors that came in those rounds were not from food. They were from textile. One was a massive blockchain, cryptocurrency a business. And I asked them, well, why do you care about what we do? Because we're agri-tech right now. And they said, well, exactly what you just said. We can see how your technology applies into all of us. Start with where you are right now, get that base moving. And what we'll be doing is we want to work alongside with you as your business grows and is ready to expand worldwide and into other industries.
And Hubert, what this question? What keeps you up at night? What's the pain point within the business right now?
I've had a lot of businesses over the years, and I've sold them all, so I can do this one. And I am not used to running a negative income statement. So what keeps me up at night? I don't like the word burn rate, just like my business partner who you see on the left there in the blue suit. He says there's no such things as burn rate. There is the temporary situation where expenses exceeds revenue. That's what keeps me up at night, is getting that changed around so that revenue exceeds expenses. And really it comes down to that. Everything else, I know we've got a solid technology platform. We've got a great team. But when you're running negative, you're running negative. And just, I like running positive companies.
Not fun, yeah.
That's the bottom line, yeah.
Yeah, gotcha. Well, listen, we're about to wrap up here. What we always like to do is give you an opportunity to sort of give a sort of a key takeaway or parting message you want everybody to leave with, Hubert, what would that be?
Well, I would say that personally speaking, and I may be biased, but personally speaking, if you look at our 52-week high and 52-week low, I think right now our share price is a steal of a deal. And if you could see what we're doing and see the potential upside, and then also, what I was saying here as the three, I can't even switch my slides anymore, but the three compelling reasons why you want to invest in our company, which is, like unlike most tech companies in our space, we are proven, we have the network to grow, and we do understand that fast growth doesn't have to be just organic. And I just want to keep everybody in mind with those, and hopefully take an interest and maybe reach out and give me a shout. I'd love to talk to each one of you more.
Perfect. Well, that's usually how we end, by asking what's the best way to get more information. So you said reach out to you. I see the website is TrustBIX.com, TrustBIX.com. Is that the best way to reach you, or what,
absolutely,
what should they do?
Absolutely. If you call the number or just send an email to info, I get it directly, and just let them know that you heard me with Paul and Trevor, and they'll pass you through to me right away. So there's no like multi-layers of gatekeepers, because we're pretty small, and I want to be always reachable to everyone.
There you go. Perfect. Mention Trevor, my name, and they'll treat you like a VIP. That's pretty rare. So happy to hear that. This has been great. So thank you, Hubert. We've been speaking to Hubert Lau, CEO of TrustBIX Incorporated. Symbol is TBIX on the venture exchange, TBIXF on the OTCQB. Thanks again for joining us today, Hubert.
Thank you. Have a wonderful day.
Thank you.